Hello again, everyone. Welcome back to the channel. This week, we are looking at a trading week beginning on tomorrow, March 9, and running until Friday, March 14. And this is the weekly analysis from Auber Strategy for the NAS100. So before we begin, as usual, let's just pray. God, we just give you thanks and praise for all your blessings and for this opportunity to trade. We ask that you will help us as we look at these analytical points, that they will help someone to improve in their trading strategy, and will also improve in our patience and in our trading psychology. We thank you and we love you. In Jesus' name, amen. All right, guys. So those of you who are new to the channel, please go back and review some of the tutorial videos that I've posted. So you'll see how I mark up my charts and how I do my analysis for the upcoming week. So as usually know, my blue lines are my weekly boundaries. And of course, my thin green lines are my daily boundaries. And the reason for that is I'm able to see what the market does on a daily basis and to make adjustments as needs be based on the daily activity that I'm trending, that I'm plotting, right? All right, so for this week, nothing has changed. As you know, I'm eternally bullish on the NASDAQ 100. Now, you may say, well, I'm looking at the NASDAQ for the past 3 weeks and it has been bearish. Okay, point taken. However, remember, I trade from a top-down analysis perspective, which means my largest time frame sets the direction for where the market is going. And my smaller time frame actually carries out what's needed to happen to put the larger time frame in place. Now let me break that down for you. If we go on my monthly time frame, which is going to be my largest time frame, and I look at my monthly, I'll see that the NASDAQ 100 is eternally bullish. Okay? Now, that does not mean that because the market is eternally bullish, I'm just going to jump in and just start buying when the market is at a high position. If the market is at a high position, in this case, an all-time high, the market needs to retrace before it actually starts buying again, okay? However, during the retracement, I have the option to do a number of things. One, I can sell the retracement next to the next higher low. Okay, I choose not to do that. Why? Because when I do that based on my strategy, I don't want to actually get trapped and caught up in a move that's only a temporary retracement. Okay, and then get trapped at the bottom trying to sell a market that's going to eventually go bullish again. Okay. And then the next thing that you can do is just simply wait. Just wait for the market to be over with its retracement before you start buying again. All right. How does that play out? So this is my monthly time frame. When I look at my weekly time frame, I see here that my weekly time frame is in fact at a higher low. Okay. Now, what does that mean for my trading strategy? Well, always look at your last 2 points and see what they have been doing. Are they consistent with the trend? And if they have been consistent with the trend, then you know the market is in fact still holding the bullish trend, which is higher lows to higher highs. So this is my weekly. It's currently at a higher low. Okay, my last 2 points were higher high and higher low. So which means the market, because remember, you read the markets from left to right. So which means if I'm looking at my higher low, my next point was a higher high. And then my next point is a higher low. So my next point should be a higher high. However, the market can only make, the market can also make a lower high, okay, which is still a high coming from my higher low. Is it going to be likely on the weekly time frame? Probably not. Okay. I'm expecting that at some point in time, the all-time high will be broken again. However, in the meantime, what do I do? Well, I go down to my smaller time frame. So for example, I go on my 1 hour time frame and I look how this is playing out. Well, this move, the higher low on the weekly, which we just saw, is actually playing out to a lower high, lower low scenario on my 1 hour time frame. But that does not bother me because again, my 1 hour time frame is very small in comparison to my weekly time frames. So on the 1 hour time frame, I still have another 22 different hour time frames that tells the story that I'm looking for. So this is the 1 hour. Let's go to the 11 hour. 11 hour is only at a low, a new low. Okay. Let's go to my 23 hour. 23 hour is only at a higher low. I go to my daily, which is essentially the 24-hour candle. The 24-hour candle is at a low point, a new low. Okay. Well, when I go to my weekly time frame, okay, on my weekly time frame, I see now the weekly time frame is showing me evidences that the market is still in trend. So the market has not broken structure on the weekly time frame as yet. It's still maintaining structure. And that is why I mentioned to you in my previous videos, when you take your move, you want to wait for your largest higher low. In the grand scheme of things, the largest higher low that we have seen up until this point is the weekly time frame. And when I look at my last 2 points on the weekly time frame, I see higher high, higher lows, which tells me that the market is still within structure. All right. So with all of that said, what am I looking for this week? Well, let's look at a number of things. Firstly, you want to see where how the markets actually closed last week. So for that, I'm looking at my 1 hour time frame, which is the time frame that's driving this bearish momentum that we have seen towards the higher low, which is the retracement higher low that we're expecting on the larger time frames. So lower high, lower low. So if you look at the last 2 weeks, notice each time it made a high, it was a lower high. Then it kept going lower highs, lower lows, lower highs, lower lows. Okay. So the last new high was created last week, Wednesday. And since then, it has been making lower highs, lower lows until Friday. But there's something significant that happened on Friday. Okay. So my last trade on Friday, I'm actually in 2 trades. For Friday, I'm actually in 2 trades. Now I show you where my entries are for Friday. They were not the best entries, but I will show you where they are for Friday. Let me pull that up, put my records up. So on Friday, 1 second. Let's look for those. On Friday, I have 1 entry at 2255.8. So let's put that number, that line in. So we're going to use a thinner line and a different color. This is my entry line. So the first one was 2255.8. That's 2255.8. This one here. All right, so that's my first entry. All right, and then my second entry is going to be 2145 even. So 2145. Okay. All right. So basically, one of my trades is actually in profit. The second one is just under my entry. Okay. However, The good news is on Friday before the market closed, the 1 hour and the 2 hour actually broke structure. Okay? Broke structure to signal that it's now making new highs. So my next move that I'm expecting is that I'm going to start seeing higher lows towards the higher highs. All right. Now, with all of that being said, okay, what you want to be looking at, excuse me, is structure. Okay. So the current structure on your 1 and your 2 hours, lower highs, lower lows, lower highs, lower lows. Okay. So from here, you had lower highs. Notice the first time the new low was formed, then you started having lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, higher low, lower highs, lower lows, lower highs, lower lows. This is the first time in 2 weeks on this time frame that we're seeing a new high. The importance of that is, remember I mentioned to you, whenever a trend wants to retrace, you cannot have a reverse, not retrace. Whenever a trend wants to reverse, okay, you must have a new high if it's coming from a lower high, lower high, lower low scenario. You must have a new high before it can even consider the opportunity of starting a new trend. Okay? All right? Let me go back and put that in perspective. Now remember over here, you're having higher lows, higher highs, higher lows, higher highs, all the way to the all-time high. Okay? However, the first time a new low was created, look at what the market did. It went back up and it created a lower high. Okay? And then since then, it's been lower highs, lower lows. Similar situation is happening here, but the reverse is true. Now you have a new high. So you're expecting that the lows are now going to be forming higher. All right? And if you get a higher low, your next move you're expecting is a higher high. And once you have that, you have your first confirmation that the trend is now starting to go back towards the major trend of the market, which is higher lows, higher highs on the larger time frames. Hope that's making sense to you. So what am I expecting this week? So going back to my 1 hour, I'm expecting that when the market opens, we will see a push towards the upside, okay? Confirming this new high that the market finished with on Friday, okay? So that's what I'm expecting. I'm expecting that push on Friday. Sorry, on Monday. Sunday, which is tomorrow, Sunday into Monday. I'm expecting that push at 6 o'clock, and I'm expecting to see some amount of bullish momentum. Okay. Now, again, I've always stressed this and I've always said it and I'll always stand by it. Okay. In terms of your cells, any cell that the market gives you is only a temporary retracement to form a higher low on your largest time frame. Okay. So with all of this selling that we saw on the 1 and the 2 hour, all of this selling that took place, this was only able to create a higher low on your largest recorded time frame. So right now, your largest recording time frame is your weekly higher low. Okay, so let's mark that. Let's go and check it. Okay, so your largest recorded time frame is going to be your weekly. Okay, that's the higher low right there on the weekly. That's the higher low. Okay, here's that mark. Let's look at your larger time frame, which is the monthly. That mark right there did not produce any point. Notice that big wick that it left, okay? That is the retracement that we saw on the 1 hour to this point to create the new high, which is that breaking structure that we're looking for to confirm that the market is going to continue going all the way up to break another all-time high. All right, let's mark and look at this point. So from here to here, put that in a different color. Put that in orange. So you see this move right here is what the market did to create that new high on your 1 and your 2 hour. So let's look at the 1 hour. Oh, it actually didn't mark it on that. I'm sorry, let me go back and choose the visibility. So daily. What's going on? Let's choose the visibility. Let's go back here 1 second. Okay, so this move right here, as I mentioned to you, which was from here to here. Excuse me, my tools are messing up. Let's go. Draw to here. All right. That is the move on the 1 hour, which started from that lower low all the way up to the new high. Okay. Let me make sure that I'm able to see this on the other time frames. Here we go. Visibility. So we want to make sure that you're included on the 1 hour time frames. Okay. So let's go to the 1 hour. Okay. See where I started from right here? That's the line that was drawn. So from the lower low point all the way up to the new high point, which is this red line right here, where it finished on Friday, which is right where it is. Okay? That's exactly what I mean when I say to you that wick was actually created by this new high. So the price moved from a lower low, went all the way up to create that new high on Friday. All right? So, like I said, for this week, what am I expecting? I'm expecting that the price is going to continue going up. It's only a matter of time before your all-time high gets broken again. Okay? Because I remember I've said to you in the past, the only thing that's guaranteed on this market is that it will consistently make higher lows before continuing to break all-time highs, which is going to ultimately be your higher highs. So when you look at your larger time frame, like for example on the day, you'll also notice that I've drawn a new fibs for the first time because this fib that the price was consolidating in between, actually it broke and created a new all-time high. So that invalidates this previous fib level where I drew from the low to the high by virtue of the fact that it made this all-time high. So now, what this means for me now is that now I have another fibs. Now, it's possible that the 1 hour time frame can only come up to make a lower high, and that's okay. Remember, I say to you that once you take your price from your lowest point, if the market comes up and makes only a lower high, by all means, take your profits and wait, because the next thing that's guaranteed to come is going to be a higher low. And for your higher lows, you keep looking at your largest time frame As long as your largest time frame is making higher lows to higher highs, your trend is still intact. Okay? The reason why I consistently take higher lows and exit on lower highs if no higher high is made is that when I consistently do this, okay, it allows me to be guaranteed that I will be in the correct direction when the market decides to continue with its structure of higher lows to higher highs. All right. So with that being said, I mentioned to you, this is where the price is right now. I'm expecting price to go up. My first level of of observation will be at the 61% line right here, looking to see what price does here. Okay, if price breaks through here, then we know there's not much, there's no resistance here at 78%. So I'm expecting that the price will continue working itself all the way up. All right. The last thing I'm going to do before I leave here is to just put in my 2025 levels, as I've always done. So to do that, let's go back to last week's chart and you'll find those levels. We'll go on a bigger time frame where it's okay. So my first TP line was 222.73.4. 222.73.4. Let's go once. Yep. Let's go back here. Let's get a line here. Change color. Purple. Paste. Okay, and my second line. I did something last week. Let me try if it will work. So I did control. I did control. Let's do that. Okay. Let's do that. And let's do this. Copy. Let's see if it works. Paste. Boom. It actually works. Perfect. I learned a new trick with TradingView. So I can go 1, 2, 3, 4, 5. I also want this line. And then I go copy. And I come here and I paste. Okay, everything is there. Perfect. That makes it so much easier. And then I just move these over. And these are going to be my levels for 2025, where I'm expecting the price to go at some point in time. The other thing that I want to say, as I've consistently said with my analysis, I don't get flustered by news. So with everything that's happening now, with all these Trump tariffs and everything like that, you know what? The market is going to do whatever the market wants to do. As I mentioned to you, volatility always happens within the context of market structure. So anything that's happening is always within some previously established structure that we have seen on the market before. So here we are on our 1 hour. Going back, my levels are intact. Let's look at a bigger time frame, like 4 hour. Yeah, my levels are intact. So I'm expecting price to come back right here. And again, we're all the way up into the expansion zones of the 261 level. I'm expecting price to actually come and go here. for all-time highs. It's only a matter of time before all-time highs gets broken. You look at the time frame like your daily, sorry, like here's your weekly, here's your 23-hour, here is your 11-hour. See right here what's happening. Price was basically consolidating for a little bit down here before I'm expecting it to continue shooting for this week. So as I mentioned to you, when the market opens on excuse me, on Sunday, I am in fact expecting that this price is going to continue shooting. All right, expecting that this price is going to continue shooting. These are my two entries right here, and that's what I'm expecting. So guys, no, it was probably a little lengthy video, but just to mention to you again, in summary, bias is still the same. Higher lows to higher highs. It's an historically bullish instrument. However, in order to trade it on a daily basis, I take my daily lows and I trade them to the next high, which is either going to be a lower high or it breaks and starts making higher highs all again, which means it's going to the trend. So if I come in on a higher low or my lower low on my smaller time frame, because again, the lower lows are in line with the higher lows on the larger time frame, then I make sure that I take my profit once my target is hit, and then I wait for my next higher. All right. So I hope that this video has been helpful to you all. I wish everyone another successful week in terms of trades. And remember, guys, I'm not a signal service. I'm not here to tell you when I'm going in and out of a trade. I'm here to help you to analyze the data and to utilize it so that you can build your own consistent strategy. So thank you again for watching. And God, we just thank you again for your goodness, for your mercy, and for your blessing. Please be with us as we trade this week. Help us to have another successful week. We thank you and we love you. Amen. All right, guys, take care and have a wonderful trading week.